How you doing? I'm Ryan Mack. Welcome back to the trading guys. Today we're going to cut through fundamentals, see what we've got. What I'm going to do first of all is we are going to go back to last week's, right? And we're going to look on the chart to see if this panned out well enough. So we've got like GBP strong, USD strong, AUD weak, NZD weak, Euro in Japan weak. I had CAD and CHF as neutral, but we've got some really good numbers came in for I think it was Canada. We'll double check as we go through this video, right? But let's have a quick look. So we had AUD is weak, Canada is neutral. Now, of course, neutral is stronger than weak, so it will give you this pull down if you have a look here. Remember, this is the weekly time frame, so that move there is a big move, right? If you look on the hourly, 4 hour, whatever, that is a big, big move. So the point is, even although we do not trade weak to neutral or strong to neutral, we only trade strong against weak, right? Or weak against strong, whatever way you want to look at it, depending on the pair. Excuse me. You can still see that it still works, right? Now, that's only one, of course. Let's have a look at some others. What do we have? Strong. We had GBP. Let's have a look at GBP pairs. So GBP, weak is AUD, so that should be buys. Here we go. Now, this here, let me show you this. This is a fantastic example here. Now, you can see we've already marked this up, right? And it's what I actually cover in the videos when I say, look, this is where you need the context of fundamentals, right? You don't just look at it like right now, we would say, right, GBP is super strong, AUD is super dog shit, so it's buys. Now, it is buys we're looking for, right? But as I always mention, excuse me, we don't just jump on the screen instantly and start buying, right? Because then this right here, and I'll make it bigger for you, this right here is going to happen to you. Now, all that is essentially the big boys are taking profit. Now, why you get these big jumps down is because when they take profit in lumps because they don't have any limitations, right? But when it's in your favor and the trade's going against you, you see always this pullbacks, right? Boom, boom, because they can't just lump in because the market will just fly and they just can't do it. It means because they will also get tons and tons of slippage and blah blah blah, and these accounts are huge, right? There's more to it than that. I'm just trying to explain it in a very dead easy to understand way, all right? But there is a lot more to it with that, but that's the kind of the simple way. Now here, this is just simply a pullback, a retracement, a correction. Now, can you trade this and take the sale here? Yes, you can. But like I always say, right, you have to remember you are taking a counter trend trade. You're taking a trade which, one, goes against fundamentals. The UK is super fucking strong. The AUD is absolutely dog shit. Excuse me. If you looked at the British economy's data on the left-hand side and you looked at the dog shit Aussie economy on the right-hand side, you would then be saying to yourself, right, you have to look at trading this way, right? When you enter a trade, you are basically saying the currency that you put your money into, right? You're basically saying, I believe this economy has the greater potential to give me a bigger return on my investment with the lowest probability of risk. That's exactly what you're saying. So therefore, if you were to sell this, right, now you can scalp it. We're not talking about scalps, right? We're talking about long-term trading here. Weekly, monthly, blah, blah, blah. Now, if you were to enter sales here, you're basically saying that the Aussie economy is much better than the British economy. This is a very, very layman's terms way of looking at it. If you sell this, you're saying that you believe the Aussie economy is providing you with an opportunity which gives you the highest probability of return with the least probability of risk, and that is not true. And how do we know that? Because the data tells us that, and the data doesn't lie. Humans can lie. You know, Jim, whatever his face is online, is always like, this is the best buy stock, and you buy it, and 2 days later, fucking tanks, you know, because he's a shit cunt. So, can you sell this? Yes, you can. I always say, yes, you can. You have to remember it's a counter trend trade. Now, what is a counter trend trade? A counter trend trade is a trade which offers you the lowest probability of a return with the highest probability of risk. Can you take it and make money? Yes, you can. Why the fuck would you? Why wouldn't you just wait For the pullback, boom, retest, you're getting a good price, and then just boom, 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 and just let it fucking go and go and go, you know? Like there, why, what, like, if you saw this, boom, you need the thing where it comes down, why would you then take this, right? Because you're probably not going to hold to here when, you know, that's all you're going to get. When you can just wait until here and then you let it go, lump in again, let it go, lump in again, you know, let it go, lump in again, boom, and you're just adding to positions the whole time. And you have that protection of the British economy backing you up. You know what I mean? You have the backing of the British economy because all the fucking data is good. Now, if the data starts to really change, I don't just mean 1 week, you know, UK data isn't good, and then 1 week Aussie has good data, because you're always going to get that, right? And that's what allows these little pullbacks here. But you have to remember, by and large, you know, you need to look at the whole context of everything. The British economy fucking smokes the Aussie economy, okay? So that's a great example. Look, area of value, we mark up the small candle, large, wait, sorry, I'm going to zoom in. Small candle, right, the white one, large blue engulfing, you mark up the small candle, what does it do? Boom, comes back, retest that zone, melts, and away it goes. Small candle, large engulfing, you mark up the small candle in an area of value, and you do that by using your Fibonacci, right? Comes all the way back down, boom, hits this zone, you've got your candle closed, you could enter as soon as it passed this, what do you call it, pin, if you want, that's fine. And away you go. Yeah, it's fucking shit hot, lads, as we go. Boom, double top. If you look down at the daily, let's have a look. There we go. Lovely. So here is another prime example, as I always show you. You see this here? Small candle, large engulfing, this white and blue one right here. Now, previously this was marked up. And what you do is, so this would be your area, right? This would be your area right here, that candle, that white candle. For this market, when you mark it up, for this market to go back up, retest this zone and melt, right? If the fundamentals are in line with it. Now, the beauty of these zones are when it doesn't retest and reject this zone and melt and it breaks through, this previous area of value to the downside becomes the area of value to the upside. Look, bang, bang. It's the exact same area. You see that? And I know this is just what I can only show you this one because of the time constraints, right? We're going to be about 40 minutes on bloody fundamentals here. However, you can go away and backtest this until your fucking brain falls out. And I'm telling you, you're going to be like, ah, holy fucking shit, this guy's onto something here. Now, if you, excuse me, if you're not like me and you don't like to trade the long game, right? Like, I'm a very busy guy, so I like to enter a trade on the weekly time frame, and I like to go away and fucking forget about it for 3 weeks, 4 weeks, 12 weeks, 20 weeks. I don't give a shit. I'll just let it go and go and go and go, right? If you don't like that, especially now, I'm doing it previously, I've done the daily, now I'm moving up to the weekly because it's much better. This strategy or method, whatever you want to call it, it works on every single fucking time frame, guys. So if you want to do this, you mark up these same zones in the 4 hour, the 1 hour, the 30 minute, the 15 minute, even the 5 minute. They all work. I'm telling you, it works in every time frame. You can go away and backtest it. I shit you not, it works. Even in my older videos, you can go back where I did physically show you quite a few pairs. All right. What else we got quickly, and then we'll move on. USD. Let's see USD Euro, because Euro is. Oh no, I don't even have it because it is such a dog shit pair. Oh, maybe I do down here. Hold on. Is it Euro USD? There it is, Euro USD. Here we go. Lovely. So Euro USD. Yeah, definitely. This was an old drawing. So what you may find here is it may come down, retest in here, pull back up, and what we'd love to see is. Oh, sorry, I'm talking absolutely shit. That's Ethereum USD. I was wondering why that's bullish. I was like, this fucking doesn't make sense. That's above, the candles are above the 200 EMA. Why is that fucking bullish? That is. Oh, it was Euro GBP. I binned off. Let me just see if I've got a Euro USD, guys. Sorry, there's a fucking. Here it is. My bad. And here we go. Look. Sorry, I was fucking running away myself there. Here we go. Look, we do this. Have this to the downside. If you look, this is on the weekly. What we're waiting for, I said it from day one, we're waiting for this. Yes, you get the pullbacks, breaks away, pullback here. Yeah, you could say you entered, boom. But what we really want is this. Look. So the candles are still pulling down for now. All you want to see, where's my bloody thing? All you want to see, lads, is this, like, boom, break away, come down. It's probably small candle, large engulfing. What you may find, guys, is it's going to hit around here, right? It's going to hit around this zone here. Let me just bring up that pin, right? You probably find, if I just move this out the way for now, what you will get is, where is the freaking, there we are. It's going to do this. Boom, 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 boom. Bang, bang. Liquidity grab. Boom, boom. Back up. Hits the box. Boom. And then it'll go both. Fuck off. Bang, bang, bang. Right? You're probably going to find it's going to do something. Sorry. Fuck's sake. You're probably going to find it's going to do something along those lines, right? But obviously, I'm not going to keep that on there because it's annoying with a messy screen. But you get the point, right? I'm going to keep it simple. Excuse me, with this. I'll move that down. So it's potentially what you're going to find. And again, look, previous support, once broken, becomes the new resistance. So it'll come down, liquidity grab, blah, 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 build orders, build orders, build orders. Might even give you a little spike up just above here, a little fake out, you know. Sometimes it can come here, guys, and just absolutely melt, right? Sometimes it can come to the center. Sometimes it can go at and pull over, and then it fucking melts, you know. Excuse me, liquidity grab. Here is another zone where it could hit. We go mark up the small candle. So you're just looking for the small candle, the large engulfing, because that's where the volume kicked in. That's why we do that. Boom, and away we go. Bang. Right? So you could get something along those lines, right? But let's see, wait and see what we get. I've got my reminder set here, but there's another one. USD is strong, Euro is weak. What does that mean? You'd be looking for sales, looking for fucking sales. What else have we got? One more. Let's have a look at USD Japanese yen. I think that was actually doing the opposite. We had some decent numbers from the yen, but again, look, it's still shit. We're in this area now. We're looking for it to push up and then give us a pullback and then crack on, right? But it is still bullish. If we jump down to the daily, look, it's still bullish. Still been giving us bullish, you know. But we do want to see a pullback here, right? So I'm not going to cover it anymore. We're already 12 minutes in. You can see that it works, guys, i.e. fundamentals, and it works because fundamentals is what makes the market actually fucking move, right? I'll cover one more because it was NFP week. Gold, let me cover. Now, if you watched NFP, let me just go to the 1 hour because I know you can see the spike on the 1 hour. If you watched NFP, you would have noticed that there was this spike on Friday, and many people, even if you look on the 30-minute, many people would have entered sales, you know. Boom, it's coming down, then it fucking just started absolutely melting here. Many people would have entered sales. Now look, here it is again, even on the 30-minute. Small candle, large engulfing, you would mark this area up, right, to come up here, retest and reject if you were looking for sales. But now that it hasn't, now that it's broken through this area, look, the previous area of support, once broken, previous area of resistance, once broken, becomes the new support. Bang. That is an area of value. That is where all the volume kicked in. Volume kicked into the downside once it was broken. That means volume will kick in here, back to the upside when the market comes back and reaches it. Market comes back, reaches this fantastic area of value, fuck off, away it goes. Let's see what that was in terms of the Fibonacci. I like to show you this as I'm talking about it because it's just fucking amazing. So from the previous low, oh shit, fuck that one. The previous low to the new high, bang in a 618. 618. What these numbers mean in the Fibonacci, they're not just pretty fucking numbers. And people say they're Fibonacci numbers. Yeah. Well, what the fuck do the Fibonacci numbers actually tell you? You know, you don't just go, well, we'll come to this Fibonacci number. They're telling you areas of value. The lower the number, the less value. So if it comes to the 38, you can enter, but you're not getting the most bang for your buck because there's not a lot of value there, right? If it comes to the 50 or some people got the 50, some people got the 500, you know, because of the way it's labeled here, 0.5, you know. I call it the 500. If it comes to the 500, one of my mates is a fantastic trader. He always takes trades which retest on the 500, right? I don't. I tend to ignore them. Sometimes I will, because here's the thing with trading, right? every single trade you have to take as an individual. Yes, you have a strategy, a trading plan, a method, a blah, 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 but you still have to look at each individual trade as its own, right? You can't look at something that happened in the last trade and go, oh, that worked on my last trade, I'm going to do it this time, because there'll be other different fucking factors at play that you maybe haven't thought about or blah, 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 right? So yes, strategies work. Strategies are very good to have. Trading plans are essential, but you also have to kind of take a step back sometimes. Excuse me. And remember, you take each trade as an individual, because you might have lost your last trade and you'll see something play out. And you go, oh, the last time I took that trade, it never worked. And then it becomes a fucking flyer. And you're like, oh, maybe I should have taken that. Yes, because you have to take every fucking trade as an individual. All right. Now, look, here it is again. Small candle, large engulfing. You mark up that fucking area because it's amazing. Breaks away. If it comes up here and retests and rejects candle close on a higher time frame, you can take that melty, especially if you're looking for sells and the candles are below the 200 EMA, blah, blah, blah. Candles are above the 200 EMA in pretty much every fucking time frame. So I know I'm looking for buys, right? Even if I don't know anything about fucking fundamentals, I know that I'm looking for buys, right? Now, don't be fucking greedy. Don't go, oh, well, it's coming down. I may as well just take that and see what I can get. Just fucking ignore the sells. Just wait. That's what you've heard the term often, right? Be a sniper, not a fucking machine gunner, right? Take those sniper shots. And you will notice that you make far more fucking money. Because remember, we're not here to trade, right? What are we here to do? We're here to make fucking money. Now, just taking more trades does not mean making more money, right? You want to take the best trades. And sometimes that's very few trades, okay? So look, once it breaks, comes back down, boom, fucking retest that. So beautiful entry, and away it fucking goes, right? Happy days, if that's your thing. Happens in every time frame, guys. Every time frame, I shit you not. So, sorry, let me get to the fucking point. So why did that come down? So we got good data, right? We got very good data on the labour market, which we're going to cover in a second, about USD. So that means USD strong, right? Now, what's this kind of buzzword that everyone throws about when it comes to gold? And they'll say, when USD is strong, gold becomes weak. When USD is weak, gold becomes strong. And it's like, yeah. If you looked at a USD pair when this was coming down, yes, USD would have been flying and getting stronger, yes. But look, fucking what? An hour later, it fucked you off. Not even an hour later, 30 minutes later, it fucked you off and it flew for another 1, 2, 3, 4 fucking hours. It flew, right? Now, why is that? It's because USD being strong has absolutely fuck all to do with gold being weak or strong or vice versa. And the way I can prove that, go and look at USD pairs for the last year. They've been going like that, fucking up, up, up. Go and look at gold for the last year. It's been going like that, up, 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 up. So if this whole fucking buzz thing about when USD is weak, gold is strong, and then if gold is strong, it means USD is weak. If that was true, then it wouldn't fucking happen, wouldn't it? The whole year wouldn't have been USD going fucking up and gold going fucking up at the same time, right? So what is this difference with gold? It depends on sentiment. So in the market, we have two sentiments, right? We have risk on sentiment and we have risk off sentiment. Risk on sentiment simply means people are willing to take risk, and people are willing to take risk when everything's good in the world, right? And then so 98% of the time, markets are pretty much always risk on, right? Because everyone's willing to take risk in the markets. Where they become risk off is if there's another drama, like if we woke up tomorrow and North Korea had fired an active missile and blown up parts of South Korea. That's a new war, right? It's like, fuck, what the fuck's going to go on? You'll start to see gold absolutely fucking fly. You'll see USD melt. You'll see safe haven currencies like, well, USD is safe haven as well, but I'll come to that. It's a little bit complicated. Safe haven currencies like Japanese yen fly, Swiss franc fly, New Zealand dollar fly, because they're all stable, right? Now, USD is actually a safe haven currency as well. A risk off currency. It's both a risk on and a risk off currency. That's the funny thing with USD. But why, if North Korea kicked off with South Korea, why would USD melt and the other safe havens get that money? Well, it's because everyone knows if that happened, America's going to fucking intervene, right? America's going to gob off. They're going to send warships. So people will be like, fuck, we don't know what America's going to do here. Let's get our money the fuck out of USD and put it into something safe. So people then lump their money into gold and it just fucking flies. You'll see it every single time, right? However, when something happens and a war just continues after about a week or 2 weeks, that even though that war continues, the markets just go back to risk on, even though previously they were risk off because of that war. When it just continues, like Russia and Ukraine, it'll just, fuck, it just becomes the norm. So markets then become normal. And even though that war still goes on, markets just go back to being risk on, right? So risk on only ever really lasts a couple of days to a week, and then it'll jump back to risk off. Risk on, and it'll be risk on 98% of the time. Okay, so that's the reason why you'll see times of USD melting and gold flying. It's nothing to do with if the USD is weak, gold will fly, and vice versa. It's to do with the sentiment of the market, right? And I guarantee you, if that happens, you see one melting and one flying, and you say, why is that happening? It's because there'll be something happening in the world, all right? Turn fucking CNN on and see what's happening, okay? Fucking hell, that was 21 minutes. I hope that's been useful for you. I try and chop it up so that it's not fucking boring, because fundamentals is boring, guys, but it's fucking essential, right? I'm pretty sure studying open fucking heart surgery is boring as fuck when you have to read books this size and fucking 7 and 8 of the books, you know what I mean, and then sit exams. I'm pretty sure that's fucking boring, but you can't just go, fuck it, I can't be bothered reading that one. You have to do the work, and this is the work. If you want to trade, genuinely, I don't mean in this fucking fake guru shit. If you genuinely want to trade and learn it, this is the way to go. If you're a scalp trader, I'll be honest with you, because I'm always fucking honest. You don't. I personally would say you don't need to know about fundamentals. You need to study price action. That's your bag, okay? But if you're someone who wants to day trade, like enter today, close it tomorrow, hold it today, enter today, hold it for 3-4 days, or like me, a swing trader or a position trader, where I can be sitting here for 3, 4, 5 weeks and not take a single trade, guys. But then I enter a trade and I just let that fucking thing go for weeks on end. Then you need to learn fundamentals. Because then when the market pulls back, you know that it's just a pullback. If fundamentals are still the same, you're like, yeah, that's still strong, that's still shit. That's just a pullback. So you don't have to go, oh, fuck, I better close and take my money. You know it's a pullback. So instead of closing and taking your money, you're simply waiting for the next area to lump in and add to your position and let both of them fucking run, right? That's the beauty of learning fundamentals. And when you learn fundamentals, you're no longer scared of the market. Like, oh, is this a good trade? Is this a bad trade? You know it's fucking good because you know that you're in line with fundamentals, okay? So let's get cracking. China. So for those of you who already know what I do, let's see. What you want to do at this stage is get your notepad and pen out. You want to write trades or this week's trades, whatever you want. And then down below it, you want to write strong, weak, and neutral, okay? Strong, then weak, then neutral. I know logically it would be strong, neutral, and weak, but the reason why we do it in this order is because what we're going to do here is we're going to look at which economies / currencies are strong, which currencies are weak, which currencies are neutral. Once you have that list at the end, you score out the neutral, and it means just ignore them, and you pair up a strong economy with a weak economy. So, for example, if you look at last week, pound and USD were strong. Weak was Aussie, NZD, Euro, and Japanese yen. So I know Euro USD is going to be sells, right? I know GJ, I'm going to be looking for buys. Now, it doesn't mean you could buy it right away because it may already be up here, So you then need to wait for the pullback, but it lets me know I'm not giving a shit about selling this. I'm just waiting for that pullback. Then I'm going to lump in, and then it's going to fly again, right? NZD USD, you know that you're looking for sales. NZD USD, let's have a fucking look. Sales, boom. Sorry, if I jump up, you will see it was actually, there I go. Look, boom. Been sales all this fucking week. All last week it was sales. We're actually waiting for a pullback here or a break below, enter, boom. So you can enter here, or you can enter here. But you can see the point, right? It's fucking sales. We already knew that last week. Why? Because the fundamentals fucking told us. That's why. And that's how we do it. Okay, so cracking on. Trades, strong, weak, and neutral. Okay, let's get cracking. Now, If any of you are new to my channel, I do each of these currency pairs individually, one by one, apart from Aussie, China, and New Zealand. Okay, I know we don't trade Chinese yuan renminbi. However, these two economies, Aussie and New Zealand, are very, very closely correlated to China. If China is doing very well, Aussie will start doing very well. If New Zealand is doing, if China is doing shit, Aussie will start doing shit, okay, and vice versa. So that's why I do them like this, all right? So what we do, let's see, okay. You need to try this, guys. It's called yerba mate, right? It's a famous tea from Argentina. 100 million times better than coffee. You don't feel like anxiety. You don't feel like you want to fucking shit 20 times before you leave the house. You don't get a crash. So if you have one of these at 10 in the morning, like, coffee, you need another one at 1 p.m. You don't get that on this. You get a full day energy. It's fucking phenomenal. But it does taste like shit. Let's see. Okay, last week, that's what we want to see. What's today's date? 12. Good. So what we do is we look at last week's, and then we look at what we've got coming up this week, right? Potentially. So cakes and services PMI is getting stronger. So when you see these, right, services PMI, PPIs, not PPI, sorry, manufacturing PMI, services PMI, blah, 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 you will see that it's usually like, 52, 57, 49, 43, blah, blah, blah. So the easiest way to look at this, you don't have to remember what all that means. Like if I look at cakes and services PMI, sometimes I'm like, fuck, what is that again? It doesn't matter. You don't need to actually memorize what the fuck it does. If you forget, just fucking click on that and it tells you. You know what I mean? That's it. You don't have to remember it. It's not going to affect your trading. What you have to remember is what these numbers fucking mean. And it's very, very simple. Anything above 50 means bullish, means things are good. Anything below 50, literally from 49.9 downwards, means bearish and things are not looking so good, right? So as we can see here, not only is this bullish, but it's actually getting better because it's went from 51.5 to 52.2. Now, on the flip side of that, if the previous was 52.2 and the actual now is less at 51.5, that is still bullish. Okay, don't think just because the numbers have decreased that it's bearish. It's fucking bullish. Okay, it just means things have slowed down a little bit. Services have slowed down. Things aren't as good, but they're still in the green. They're still doing tons of fucking business to keep them in the green and keep them bullish. Okay, so it's very important to know that. Building approvals. Massively tanked. I mean, I would guess that. Oh, in fact, it's Australia, so this is actually their summer. Even though it's winter, it's their summer. So, yeah, that's pretty shit. But again, it's month on month. So, yeah, it's not that much to worry about, but it is pretty shit news. GDT price index, shit. It's getting better, but shit. ANZ commodity prices, shit. Massive drop there. CPI year on year, we want to see that. That's good news. It's went up from 2.1, higher than forecasted. It's went to 2.3. So that's good news for the Aussie, right? It doesn't instantly mean, okay, Aussie's strong now. No, you need to look at everything, right? And the Aussie's still shit. Retail sales, shit, and even worse than expected, which is very bad. What? Pardon me. Why? Because it's just been Christmas. And Aussie retail sales are expected to be through the roof, right? But it's not. It's dog shit. So that's very bad. Good trades balance. Now, remember what I just said to you a moment ago, right? I says when China is doing well, Aussie will do well. China production, services and manufacturing, blah, 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 is now up, by a very good amount. What else is happening? Goods trades balance is up by 2 billion. This is the effect China has on Australia, guys. So what does the goods trades balance mean? So when I nearly said company there, when a country imports more than it exports, i.e. when it buys more than it sells, this will be fucking red because they're buying more than they're selling. They're losing more money than they're making, right? So this will be red, and it's called a deficit. Okay, if you want to write that down. Now, when a country exports more than it imports, it fucking makes money because you're selling more than you're fucking buying, right? They then have a trade surplus. They are in profit. What happens when everything in China increases, manufacturing, services, blah, blah, blah? They need more natural resources to make whatever the fuck they're making in their factories, right? Tin, copper, nickel, iron, aluminium, you name it. Where do they buy it from? Fucking Australia, because it's a country which is full of mines, right? You hear about it all the time. Mining is big business in Australia. So, like I just said to you, when China does well, Australia does well. Now, excuse me, when you look on here, you can physically see that play out. You can physically see it fucking play out, right? It's fantastic. So for me, excuse me, even although these are two decent numbers, personally, I'm not really moving Aussie dollar. Into strong. I mean that's not enough to move it into strong, right? The Aussie numbers are just pretty shit right now, so I'm just going to keep it at weak. Now the thing is, I'm keeping it a week on paper, right? But in my mind, you could potentially put it to neutral against weaker economies, right? I don't want to go down that rabbit hole with you because it'll just fucking confuse you right now when I'm trying to teach you this. So I'm going to put it at weak just now, okay? But as you progress and you get to know this stuff yourself, you'll be like, okay, it's weak, but I'm going to remember the numbers. It's potentially creeping into neutral, right? But you do need far more data to move it there, okay? You can't just move it because you've got two fucking good numbers, okay? Doesn't work that way. NZD, again, New Zealand dollar is absolutely shit. So I'm putting that to weak. Sorry, I'm scared in case I tug this cable on my freaking microphone, because if I tug it, the microphone will turn off. This will keep recording, and I won't know the fucking microphone's turned off, right? So I'm trying to avoid touching that bloody cable, and it's right at my elbow, so it's annoying. So things are looking up. We need to keep an eye on this, right? Let's see what we've got coming up next week. Oh, fucking tons of news. What do we actually care about? Money supply, China, Westpac consumer sentiment, okay. Foreign direct investment, China. FPI, month on month. Let's have a look at FPI so you can see what that is. Because it's not a common one. Change of the price of food and food services purchased by households. Oh, so it's like CPI, okay. It must just be New Zealand's method of CPI, okay. And it's a month on month, so we want to see it, but we don't really care, right? This one, we want to see quarter on quarter, and really year on years are the main ones we want to see, okay. Employment change, we definitely want to see that. Obviously, if employment is high, that's fantastic for the economy / currency. If employment is low, that's not good. If unemployment is high, that's not good. If unemployment is low, that's good, okay. So why, right? Why is unemployment? Why is it bad? Because the government helps you if you're unemployed and blah blah. Well, it's bad because you don't get help right away, right? You need to kind of fucking prove that you've been trying to get jobs and this. You know how hard it is. And two, when you're unemployed, most people in Western countries live paycheck to paycheck. At best, right? Not everyone, but most. At very best, if someone loses their job, they've probably got about a month's worth of savings, maximum 2 months worth of savings. And if they don't get a job in that month or 2 months, they're fucked. So what happens is they don't have any money. They can't afford to pay their mortgage. They can't afford to fucking pay their car bills, their telephone bills, their internet bills, their home insurance, their tax, their petrol. And it just has a massive, massive knock-on effect, okay? So that's why we really care about things like employment change and unemployment change. And of course, in the reverse, the opposite to that, when employment is high, it means every fucker can pay their bills. So that's good for the economy, okay? New home prices, GDP quarter on yearly. Yeah, we want to see that, but it's China again. Industrial production, that's what we want to see. We want to see if industrial production has increased, because that will then we know, okay, if that's increasing, then we know for next month we should start to see better numbers for Aussie, and Aussie might be starting to pull itself out of weakness, right? Doesn't mean it is, but it means there's a good chance. Excuse me. Retail sales year on year, we want to see that. Again, we don't really care about retail sales because it's China, but we want to see this stuff, okay? So Let's go back. Aussie and New Zealand are both weak. Now we start to do them one by one, starting from Canada. And it gets much quicker now, guys. Excuse me. Trade balance Canada is getting slightly better. It always confuses you because it's got a minus, right? You're like, fucking think about that. Yeah, it's better, and it's actually much better than forecast. Okay, better than before and better than forecast. IVPMI. Now this is important. I cover this in all my videos, but I never know who's watching my video for the first time, right? So if you watch it all the time, I'm sorry for repeating myself, but I don't have any choice. So IVPMI, right? That's great. So it's 54.7. And look, it absolutely blasted the previous number of 52.3. Massively bullish. Excuse me. So why the fuck is it red? Because you would just look at that. If you don't know how to read this properly, right? You're going to look at that and be like, red? Oh, I don't know. Maybe that must mean bearish, right? Because green is good, red is bad. No. The reason why it's red, even though it's much better than before, is because they forecasted it to come in much higher. They forecasted it to be up at around 55.4. And it's came in less than what they anticipated to come in at. Have you ever heard of the term priced in? Oh, fucking, the banks have priced in Canadian dollar at blah, blah, blah. Yeah, well, they've priced it in based on these forecasts. And then, it hasn't done as well as what they forecasted. So you might see, even though it's done well, you might see a pullback because they're like, oh shit, we heavily invest in Canadian dollar. It didn't quite perform as well as we thought. And you get a pullback when they take some profit. But it is still bullish, okay? So that's quite, it'll be more bullish against shitter currencies. Masuk! Hold on, someone's at my fucking door. Yo! It's okay, my sister-in-law. Yo, mate. So, sorry, it's my little nephew and niece. Where was I? Employment change. Fucking fantastic. But of course, what do we have to remember? What did we just come out of? Christmas, right? These are Christmas numbers. So, sorry guys, I live in Jakarta. It's the fucking most polluted city on the planet, and that's why we all have a bloody cough here. Employment change, yeah, 90. Fucking fantastic. The forecast was 24.9. Really good numbers for Canada. Unemployment is lower. Building permits lower, but yeah, fuck it. I'm actually going to switch Canada over to, I wouldn't say, is it neutral? It's doing fucking quite well. I'm going to move over to strong for now, right, as one of the stronger pairs. No, let me think. Hold on. Because it was getting good numbers. I'm not just changing it because it said one set of good numbers, right? Last week, the numbers were pretty poor, but you don't go by week. Before that, the last 2 weeks before that showed very good strength and very good numbers. So do you know what? Yes, I am. I'm going to put Canadian dollar back at strong. But it is important for you to understand I'm not doing it just because these numbers are good. Last week we had a couple of bleh numbers. They weren't good. They weren't shit. They were just kind of meh. But before that, just before Christmas, we were getting really good fucking numbers from Canada. So it's kind of proven itself that it is on the uptake, right? That's why I've moved it, guys. Very important for you to understand that. I don't want you to think I only moved it because we're getting one set of good numbers. Next week, manufacturing sales, wholesales, they're one for we've got pretty shit news next week. Okay, nothing much that we actually care about. Let's move on and get this finished. Retail sales year on year, again CPI month on month. Shit. Shit. Same, stable. Foreign currency reserves, good. Unemployment rate, yeah, it's stable. So I know we don't really care about Swiss franc, right? But you have to look at it every week, okay? And then there's fuck all there. Jangan berisik! Euro, let's have a look. So Swiss franc. So for me, I pretty much always put Swiss franc in neutral, okay? And it's to do, I only really trade it in risk on, risk off scenarios, okay? And against really poor currencies, blah, blah, blah. It's a little bit of a black sheep. It's its own kind of entity when it comes to trading that, in my personal opinion, on the way that you trade Swiss franc, right? So I always just put it in neutral, and then, I do a lot of shit in my head. I don't want to confuse you in this because this is a pretty basic video. And that would take up a lot of time. What we got here? Euro. So when it comes to the Eurozone, right? Yes, if it's year on year, we like to have a look at Spain and France when it's year on year and blah, blah, blah. But overall, the ones that we really care about is really just France and Germany, because they're the only two major economies that have enough kind of leeway to really shift the direction of the euro. Okay, so yes, we like to look at Italy and Spain, but the ones that we genuinely care about is France and Germany. Okay. Now I'm gonna just fucking fly through this, right? Because we cover these each time. I'm just gonna show you. Once you know the numbers, you don't need to spend your time reading it all, like Italian bank holiday, German prelim CPI, actual for forecast free pre. You don't have to do all that shit, right? It's fucking mind numbing and it's very time consuming. You just look at the fucking thing and you're like, you just quickly glance at previous and actual. Okay, it's up, bullish, 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 bearish. Bearish, but if you look at previous, 48.2, things are getting slightly better, okay? Things are increasing. However, it's still bullish, okay? It's still bearish. Just because that's green, don't start to think that's bullish because it's green, right? It's not. It's bearish. So, bullish, 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 bearish, bullish, bullish, bearish, bullish. Again, don't think that's bearish just because it's red. It was previously -1, now it's 2. They thought it's red because they forecasted it to be 0.3, okay? And it came in worse than they forecast, but much better than previous, so that's bullish, okay? Bullish. But again, it's Italy, okay? That you need that context as well. Of course, so it's stable. So again, you would say that's bullish because it's stable, right? Bullish. Bullish. That's quite good. Stable, bullish. I mean, it's quite a high number actually, but still. Bearish, bearish, bearish. Bullish, bullish, bullish. Fucking hell. Bullish, 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 bullish. Because it still came in. No, sorry, it's bearish, but it came in better than it previously was, right? Euro had a good week there. Now, like I say, guys, just because it's had this is a fucking great week for Euro. Euro has been in the hot locker for a long time, right? For me, it's still in the weak category. It's not strong just because of these numbers. Yes, it's had a good week, so I'm happy enough to slide it across from weak into neutral for now, right? However, if I was trading it against, a strong pair, like if it was Euro USD, of course, I would be selling the shit out of that. I would not be backing the Euro above the USD. Okay, no fucking way. Or the pound, for that matter. So it does. We've had a great week with a really, really strong numbers. Okay, positive for the Euro, but it doesn't mean that it is now positive. We need to see numbers like this for the next week and the week after. Be like, okay, we've got 3 consistent weeks. Now Euro's potentially making a pullback. Then we can flick it back to strong, right? And then we also tie that in with price action. What we're actually seeing on the screen in terms of price action, okay? And that's how we work it. So I've moved Euro to neutral for now, okay? Every time I do these things, I always tell people don't be noisy, and nobody ever listens to me. It seems to be the time where people love to bring hammers out and smash my kitchen up. I don't know why they do it. It's not even my wife. My wife's in bed. It must be the fucking maid or something. I tell them all the time, don't make a fucking noise. Anyway, French government. Okay, what have we got next week? Italian industrial production. Jangan berisik! French final CPI month on month. Industrial production. Yeah. Well, so we'll get CPI next week. Core CPI. Okay, we do want to see that. Excuse me. We want to see the trade balance. We want to see CPI. Final CPI up here. Yeah, we do want to see these things, okay? When it comes to actually watching this stuff during the week, I don't use Forex Factory. I use this. Trading Economics. you get far, far more data here, and the data comes much quicker. So, for example, if it says it's going to be released at 8:30, the minute the clock strikes 8:30, bang, the numbers will be up here. If you look at Forex Factor at 8:30, it'll just be pending for about fucking 5 minutes, right? Sometimes even 10, 15 minutes when this has already been released to the public, ages before. And you might find there's 4 news events for Euro, and you look on here and there'll be like 12 news events, so you get a lot more data on here. All right. Anyway, moving on. Pound. We had that strong, even though it had bad numbers last week, I still kept it strong because the economy is strong. Okay. Final services PMI. So look, you can see they got a little bit worse. However, it's still bullish, guys, okay? Things slowed down a little bit, yeah, but what did we have last month? We had the Christmas holidays. We had tons of bank holidays, Christmas holidays, New Year, blah, 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 okay? So we kind of expect a little bit of a slowdown because everyone's on holiday, right? Excuse me. BRC retail sales monitor year on year. They're up, massively up. That's a good thing, but we also expect that because it's based on December, right? Christmas, people spend more money. Halifax HPI month on month is down. Again, people are on holiday. We don't really expect people to be applying for mortgages during Christmas time, right? So that's why we would expect that to be down at this time of year. That's fine. Construction PMI, 53.3. Bullish, 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 bullish. It is slowing down, yes. But again, we'd expect that. Excuse me, because it's Christmas time. But it's still bullish, guys. It's above 50. It's fucking fantastic. Housing equity withdrawal, that's good because it's, even though it's minus, it's still, it's went up. 30-year bond auction up, fantastic. So yeah, pound is strong, guys. Pound is still fucking strong. Excuse me. Next week, what we got coming up? I'm actually teaching a 4-week trading masterclass tonight at 8 o'clock. So I'm gonna have to go through all this again. I'm doing it for the next 4 weeks, which will be fun. But yeah, this needs to be done right, regardless. CPI, core CPI, PPI, fuck it. We've got a massive week next week, guys. I'm not going to bore you to death going through all this. GDP, retail sales. We've got a big week next week, so it should be very good for pound numbers, okay? Let's see what we've got. So pound is strong. Let's see what we've got here. Shit. Well, it's a little bit better, but they've done that on purpose, right? If you actually look at the news events, like I don't mean this news, like actual news, it's all like the Bank of Japan saying we're going to sell bonds and we're going to do this, and so this is all interference, right? So it's kind of shit. Consumer confidence, shit, i.e. bearish. Average cash earnings have increased. Now again, excuse me, if you follow the actual news, you will see that again. This is the Bank of Japan / Government of Japan interference, right? They are actively making people earn more money. They're making people's wages higher. And they've already said that they were going to do that as a plan. They're like, we have the intention to increase everyone's salary, their average earnings, to try to boost the economy. Now, how does that boost the economy? Well, if you have more money, guys, they fucking drive me nuts. I tell them every time, I'm busy, don't fucking make noise. So, where the fuck was I? Right, average cash earnings, yes. So why does people having more money, getting paid a higher hourly rate or higher salary, blah, 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 why does that boost the economy? Well, it's because when you have more money, what do? You buy more shit, right? If you're in a job, right, and you get promoted or whatever, or you just simply make more money, and the boss says, right, you're going to move from 21 grand a year to 28 grand a year, and you're like, happy days, cheers, easy. What's the first thing that goes through your mind? Be honest with yourself. The first thing you think about is, I'm selling this fucking Ford Focus, and I'm getting an Audi TT, right? It's the first thing you think about. I'm selling this piece of shit 23-inch TV, and I'm getting a fucking 65-inch. You buy more shit. And when you buy more shit,
you're putting that money back into the economy and keeping it churning, right? Because everything you're buying and paying, you're also paying taxes on it, so it builds up the country's trade balance, and what do you call it? I forgot the fucking term for it. I'll find it later. You're building up their trade balance, basically. Not only their trade balance, but it's their the country's. I fucking forgot. It's a country's bank account, basically. I forgot what the bloody name of it is. Sorry, but that's what you're doing, right? So that's why average cash earnings being higher. That's why it's positive, i.e., bullish for an economy. Okay, potentially. Household spending year on year has increased. Why is it increased? Because people are earning more fucking money. You see how it works? It's still shitty because it's minus, but it's massively increased, right? It's taken a massive, what you could just call it a 1% jump, 0.9% jump. Let's just say one, without being gay. It's taken a big 1% jump, right? Happy days. Leading indicators down slightly. So even though that's happening, it's a long process, right? You don't just go, oh, Japan's financially fixed. No, Japan is financially fucked. However, they are trying to fix it, right? So Japan is still weak. So what does that mean in terms of the charts? That means that you would never in a million years sell GJ, UJ, EJ. Fucking never in a million years. You would never sell it. Yes, it's going to pull back down. You'll be like, Ryan, you said don't sell that. But it's been melting all last week. Yeah, because it's a retracement. It's not a crash. It's not a fucking market collapse. It's not a recession. It's just a pullback. Banks are taking the profit. They're taking profit, getting ready to fucking add back in and make more money when it goes up. That's all they're doing, guys, all right? Markets will always pull back, whether you're looking for buys or sells, right? If you're looking for sales, they're going to pull back up to your area and then melt again. You're looking for buys, they have to come back down to an area of value and then they'll crack on again, right? So you know that you're definitely not buying the Japanese yen, okay? Because their economy's fucked, that's why. What else do we have next week? Bank lending. So bank lending is a good one. We like to see that. Why? Because if banks are lending more money, what does that mean? It means that people will spend more money. All right, people spend more money. That's good for the economy. It's good for the currency. Excuse me. Economy watcher sentiment below 50, bearish. Sticky. Let's see what it does. PPI year on year. So if this increases. If PPI, excuse me, fucking hell. If PPI does increase, it means that what? What do you expect to see if PPI increases? You expect to see CPI increase also after that, right? Because PPI is for like companies when they buy all this kind of wholesale product, right? And then if it's getting more expensive, i.e., it increases, right? The forecast increases. That means it's getting more expensive for companies to buy their initial product, right? So it means that they either have to take a hit on their profit, or what are they going to do? Companies don't do that because they're greedy bastards. They pass that that kind of extra cost, I should say, onto the consumer. So that means CPI. That means the cost of goods when you go to buy them from the shop are going to be more expensive. That TV is going to be more expensive this week than what it was last week, right? So that means CPI is going to increase as well, and blah, blah, blah. So that's how, by knowing one thing, you can predict the next thing, right? So yeah, Japanese yen is shit. Boom, we are on the last one, guys. And then we are good to go. And then I'll cover oil with you, right? I'll cover oil at the end of this. That's a good one. Oil is still bearish. Yes, I know it's moving up just now. I already said that in video 2 months ago. We want to see it come up, but we don't want to trade it up, right? We want to fucking take it down. So I'll cover that in a second, so bear with me. Let's look at last week. Last week was NFP, non-farm payroll. So let's just do it quickly, right? We don't have to go through every fucking thing. We just look at them. Again, bullish. Why is it bullish? Because it's above 50. Yes, it's went down slightly, but it's Christmas. We expect that. But it's 56.8. That's fantastic fucking numbers, right? Fantastic numbers. So, bullish. Factor orders, bearish. We expect that because, things are slowing down at Christmas. Bearish, bullish, bullish, bullish. Non-farm payroll, let me think, 146. So let me just check what that is again because the colours. If it's less, greater than forecast. Okay, so that's bearish. Bullish. Bullish because it's the same. Crude oil, we don't care. Don't care. Bullish. Bullish. It's bullish because it's better than before. Sorry, I'm talking absolutely shit. I stand corrected. My bad. That is, I thought that was minus 17. I'm sorry. That's bearish. Job cuts. That's bullish because there's less job cuts. So that's a good thing. It means more people are in a job. Bullish. Sorry. Yes. So let me explain this one to you. Why would you still say that's bullish, even though it's less? Okay. Important lesson here. It's because it was, yes, it's dropped down slightly, and they're trying to manage inflation as well, right? So it's dropped down naturally itself. But why it's still it's good for the markets? Because it was already predicted, it was already forecasted, and it was bang in line with forecast. So that's actually good, even though it's dropped slightly, okay? So it's good to know that as well. Although, in general, this is where trading gets a little bit fucking confusing. Of course, you want to see average hourly earnings increase, right? For what I explained before, but this is just month on month, and yeah, we're looking at the kind of overall big picture. All right. Non-farm payroll change, fucking fantastic numbers. Fantastic. It was anticipated 164. We got 256. Amazing numbers. Bullish. 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 Okay, so the USD, yes, it had some bad numbers, but the USD is a freaking powerhouse. And just remember, on the 20th of this month, so in 8 days, Trump will be inaugurated, and we are in for a fucking amazing 4 years on the markets. Okay, remember, markets will pull back when he gets in at times. It's not a recession. It's not, see, I told you, Trump shit. It's just a fucking market pullback. Markets will then fucking fly when Trump's in. I'm telling you, right? What we got next week? Sorry. Oh, loads next week. We've got core CPIs. Yeah, we've got a CPI. Just call it a CPI week. We've got unemployment, retail sales, core retail sales. Yeah, we've got a good week coming up next week. We really want to see. Numbers should be decent. So yeah, good week. So let's quickly recap. Then I'm going to cover oil, and then you can go about your lives. All right. Strong CAD for now. You could say it's neutral if you want. I've just put it in strong, okay? CAD, GBP, USD. Weak, AUD, NZD, Japanese yen. Neutral, CHF, and Euro. Yes, Euro had a fantastic week. We will be monitoring it to see if it shifts over to strong, but we need another 1 or 2 weeks of numbers, really good numbers first, before we can make that shift, okay? Oil, let's quickly jump onto oil. Now, look, as I said, if you go to the lower time frames, yes, it's going. This is the weekly. Even if you go to the daily, look, it's going up. And if you look at my older videos from let's say back here, 1, 2, 3. If you look at my videos from 2 months ago, that over the last 8 weeks, I said to you at every single time, can you buy from here? Yes, you can. You can buy from here. Why? Because it's a massive area of value. You can see that all the big companies believe this is where the value lies to buy oil. How can you tell that? Because they fucking bought it every time it came here. So that tells you they believe this is where the value is to buy it. They don't want oil to fall any lower than that. Now, I mean, you could mark that up as well, actually. Boom, here goes the candle here. It could retest and reject there. So it could just start melting now. However, fuck's sake. I would like to see it hit here and melt, okay? Now, look, yes, I already told you could buy from here. You would have made good money. However, that's not the trade, right? That is the counter trend trade, which I said you can make money on them, but you just want a fucking sniper shot, lads. I'm telling you, you want to be, see all this bullshit. You don't want to be buying this. You don't want to, if you bought that, happy fucking days, right? If you bought that, happy days. However, this is the trade. Boom, limp in, close 80%, leave 20% as a runner, stop loss up here. Boom, comes up, reject. Look, small candle, large engulfing, comes across, retest that zone, add to your position. Boom, small candle, large engulfing, comes back up, retest that zone, bang, add to your position. You've now got 3
fucking positions added because you know you're looking for sells, right? Boom, 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 and away we fucking go. Just wait for this to come in. It could come here. It could even come up here, guys. Who knows? If it does, you're just going to wait for the sales again. Or if anything changes fundamentally with oil, i.e. it starts doing this. Boom, boom, boom. Break above, retest. We would then switch to buys, right? We're now buying. If the fundamentals tell us it's buys, right, we would switch to buys. So you're either going to enter here for the sell or you're going to enter here, boom, boom, for the buy. You see what I'm saying? But you need that confirmation. What most of you will do is, most of you will enter here, right? This will start pulling back down. You shit your pants, you close the trade, and it will fly. Whereas really, you should have allowed it to close back down, got the confirmation here that it's closing in your direction, and then entered the trade here. No retest, no trade. As simple as that. No retest, no trade. That will save you from a lot of fucking hurt in the markets, right? And if it just goes like that, right? If it just fucking starts flying and doesn't give a retest and just fucking goes and you miss the trade, who gives a shit? Who cares, right? There'll be another trade coming fucking, 2 weeks later. So oil fundamentals, why is it sells, right? Because you need to look at the bigger picture. I'm fortunate that my uncle is big in the oil industry, and we have a couple of guys in our trading group who work in the oil industry. And when you know the kind of inside stuff, I mean, you can find it out online if you want, but loads like OPEC have reduced their amount of oil production, right? So that tells you right away. Look at fucking OPEC meetings. They've reduced their amount of oil, so they're limiting the supply. Which normally means if there's a limited supply and big demand, price goes up. But they're limiting the supply because there's no fucking demand. That's the difference. So when you look, where's oil? Let me just quickly show you. Crude oil inventories. When you look here and it's like -1, you think, oh, that's better because previously it was like -4 million. It's a false demand because yes, people are buying more oil, but they're only buying what's available, and what's available is a very small supply in comparison to what it should be. Okay, so it's a kind of false positive. Oil rigs around the world, they're all just churning over. They're not mass producing oil. When they're mass producing, big supply and even bigger demand, the price of oil flies. You are looking to buy oil. Right now, supply is fucking tiny compared to what it should be, and there's not a lot of demand. So you're looking to sell oil, okay? That's it. Kazakhstan, all Oman, fucking Iraq, Tajikistan, the whole fucking lot, they've all slowed down their oil production. And they're not producing anywhere near the amount of oil that they should be. And that's why we're looking for sales. That's why, yeah, you could take that, but you're taking a trade which is a higher risk and lower probability. You want to be taking a trade which is a higher probability with the lower amount of risk, right? That's it. Okay. I'm Ryan Mack. This is the trading, guys. We no longer do the month trial. I just wasn't bringing the right people. This month, very important month for you guys. We currently do our monthly subscription where we give you education videos. We give you signals of the trades that we are taking. When I'm trading, I trade my managed accounts live in front of your face. So you can physically watch me trade the accounts and you can copy my trades. You can ask me questions. Whenever I don't have any trades, I provide you with daily mentorship. I will say, guys, you can clearly see for my method, there's no trades today. There might not even be any trades this week. However, I'm sitting in front of my computer. If you guys want any daily mentorship, any one-to-ones, let me know. And I do that included in the price, guys. I do not charge you any extra. There's other groups that I've got involved in just to see what they're up to in market research and blah, blah, blah. Every single person who offered one-to-ones and genuine mentorship, they were offering 4 1-hour fucking mentorship sessions for like $1,500, $2,300. I do not charge you anything extra for it, guys. It's included in the price of the monthly subscription. All right. Also, this is the last month that we are doing our monthly subscription at £97. As of the 1st of February, we are increasing our prices to £147. Again, every single group that I've been in, they did not provide anything anywhere close to what we provide in our group, and they were all double the price of what we're. They're all like 190 quid, 240 quid, 275 pounds a month, blah blah blah. And they weren't providing. They were providing some things that we give, but they did not provide everything that we give. You know, so we're going to increase it to £147. If you jump on our monthly subscription on our Discord at the £97 before the 1st of February, then each month, even after the price increase, you will continue to pay that £97, okay? It will not increase. However, if your payment bounces one month and the system rejigs, it will restart you at £147 because the 97 will no longer be in existence, okay? So please remember that. However, if your payments don't bounce and you stay in, you will continue to pay the £97 a month, whereas all the new members will pay £147 a month, okay? Anyway, £147 for what we provide is cheap as fuck, all right? Inside the Discord, you will see all the students' results. They post it literally on a daily basis, and the guys are killing it, okay? We've even got guys that have been in for 3 years who can trade completely by themselves, and they still stick in the group because they just love the community. They love all the banter and blah, 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 okay? So, depending on which social media platform you're watching this on, if it's on YouTube, you will see the links below to come and join our premium Discord channel, okay? I'm Ryan Mac. This is the Trading Guys. Much love. And I hope you guys find this free fundamental education stuff every single week valuable to you. Okay, guys? See you soon. Happy New Year.